Guys, welcome to Forex Trading Strategies. In this video, I'm going to teach you guys how to use the moving average the right way. Okay, there's a lot of misconception out there on how you can use the moving average, and I've tried almost everything. Okay, and most times I still end up losing my trade. It's quite disappointing. So I've tried to figure it out myself, watch other couple of professionals, and I've been using it over time, and I can gladly say there's a solution on how you can trade profitably with the moving average. Okay, so basically I trade the boom and crash. Okay, the reason for that is because the forex market has a lot of things, the fundamentals, where you have to listen to the news to do this and that. Okay, so I'm not good with that, so I trade the boom and crash. Just in case you like to trade the boom and crash, the link to create your account is in the description below. Trust me, they are good brokers there if you can do your research on them. And also, I have a Telegram group where I analyze the market and drop some signals for those that are in the Telegram group. So create your account and join the Telegram group for the market analysis. Okay, so it's as simple as that. Now let's go ahead and try to figure out the boom and crash. Okay, figure out the moving average. So let's try to figure out the moving average. You can see here my chart is plain and I have nothing other than candles. Okay, only candles. Those are the things I have on here. So let's see how we can add some indicators to it. But before that, I need to explain something to you. Okay, what is a moving average? Now, moving average, according to the name, is the average movement of the market. Okay, the average movement. When you speak of average, then you are dividing. For example, if you are using a 5 moving average, okay, 5 period moving average, what does it mean? It means it's going to calculate the candles. Okay, 5 candles backward, 5 candles backward. Okay, then it's going to add it together, the value, and divide it by 5. Okay, now we have the apply to two. So if you use apply to close, meaning the close of each candles, okay, the candle started from here and it closes at here. So if you're using the close of each candle, okay, getting those values, add them together, and it's going to divide it by 5. So for example, let's say it's added together and it gets about, let's say 12.5. okay, 12.58. Now, and we are using 5 period moving average. Okay, so you are going to divide this by 5 to get the real price of the market. Okay, that is simply what the moving average does. Okay, so it's going to give you the average movement. That's why some people say moving average is a lagging indicator, is this, is that. Okay, all indicators lags, but you must know how to use them. So let's divide that 12.58 divide by 5. Okay, that's going to give us 2.15. okay, 2.516. 2.516. okay, so this is the result of our moving average, given that the total of our 5 closing candles gives us this value. Okay, so our price action should be around here. Okay, that our moving average should give us this value of 2.516. Trust me, I used a real calculator, and you can do it at your end as well. Okay, so if it's like this, then how are we going to apply this moving average to our chart to have an effective trading? Okay, to have a high probability trading. Okay, this is quite simple. Okay, you're going to love it. Now watch me. For us to be able to do this, I'm going to first need to add those moving averages to this chart. Once I'm done adding it to this chart, then we can go ahead to use it the best way we can. Okay, I'm going to explain all of this to you, so stick along. So I'm just going to click on the screen right here. I click on this F button, okay, to add it. If you don't know how to use use MetaTrader 5, I have a link in the description below for you, a video I did about how to use MetaTrader 5, and you can use the video to educate yourself. So click on here and you see a lot of indicators. You see Bollinger Bands and all. Okay, just look for moving average. Okay, and here it's not far-fetched. Okay, here we have our moving average. So I'm going to click on moving average and I'm going to set it up. Okay, so the first moving average I want to add, I want it to have a period of 20. Okay, period 20. That's the period. I want the period to be 20. Just the period. Period 20. Okay, that's what I want the moving average to have. Period 20. Then the shift is 0. Okay, shift 0. Okay, so we have it that way. Then the method, okay, the method, you click on the method right here. I'm speaking of here. Okay, if you click on it, there will be options here for you, or you click on the drop down arrow here and you have some options. So once you click on it, you see simple, exponential, smoothed, and linear weight. Okay, just put it to simple moving average. Okay, put it to simple. Okay, so that's all. Okay, that's all. So you can choose the pixel you want, but I think that 4 is okay for a moving average 20. Okay, let me just put it to 3 pixels. 3 pixels. Okay, 3 pixels. Then you click on done. Okay, look at done here. Click on done. Once you click on done, it's going to automatically add it to your chart. Okay, so this is how our chart look like. So let me zoom in a bit so you can see the bigger picture of things. Okay, so you can see the moving average is following, okay, following the candles. Okay, it's following it. Awesome. Now let's go ahead and add one more moving average. Okay, that is how I like to use it. So I'll click on here, and of course if you're using one alone, using average 20 alone to analyze the market, you might not get what you want. Okay, you might end up losing most of your trade and blowing your account. So click on F button, then we click on plus. Okay, this F plus right here, sorry, we click on F button. Okay, then click on F plus, this F plus, and we go ahead and click on moving average again. Okay, so moving average again, but this time around it's going to be moving average 50. Okay, not 20, moving average 50. I like using the two together. And next is shift 0, apply to close. Okay, then you click on, you choose the color. Okay, this time around shouldn't be white. Okay, probably you can give it something like a color that we don't have on the screen. Okay, let me give it something like this. Then the pixel should be a bit bigger so I can see it clearly. Then we click on done. Okay, so you can see it clearly that we have our moving averages on the screen. Okay, we have our moving averages on the screen, and we can go ahead to use them to analyze our market. So how do we use this? How do we use it? I'm viewing this market in 4 hours time frame, so I'm going to reduce the hours to probably something lower. Okay, that's what I'm going to do. I'm going to reduce it to something lower so that we'll be able to see the market clearly. So I'm going to reduce to a lower time frame. So probably I'll enter 1 hour time frame, and we can use this to analyze. So a good way of using this moving average to trade is when the market is forming a trend. For example, this is crash 300. So the crash is only good to trade it on uptrend. Okay, so when the moving average crosses from down up like this, okay, that is the first indication that the market is going up. Okay, you see the crossover right here, you see the crossover at this junction right here. Then you need to check other things as well. Okay, what is the general movement of the market in a higher time frame, probably in the 1 day time frame or in 4 hours time frame? If the 4 hour time frame is indicating an uptrend, then we have our moving average crossing each other. Okay, the 20 moving average crosses the 50 from down up, then we can enter for a buy signal. Okay, for a buy market, we enter for the buy. You can see that this is a whole lot of candle up there. Then it came back and touches the 20 moving average. Okay, went up, then crosses it down, touches the 50 moving average, consolidated for a while, then it took a downtrend. Okay, now we do not trade the crash on downtrend. If you're trading it on downtrend, it's very volatile. The volatility is way high, so crashes can be traded on uptrend. Okay, for now that's how you should have it in your mind. Crashes are traded on uptrend, while boom is traded on downtrend. Okay, so that's the first thing we check, the crossover up. We check the crossover up, then we can also check the candle patterns. Okay, we can check the candle patterns if you are good at candlestick analysis to know if it's a bullish trend or a bearish trend. You need to do that as well. So I've mentioned 3 things. First thing is the crossover right here. Okay, second thing is the general trend of the market, okay, general trend of the market. Then the third thing is the candlestick confirmation. Okay, candlestick. So you must learn candlestick market. Okay, how to read the candlestick. all this bullish engulfing, bearish engulfing, hanging man, all of that. Okay, you need to know it, hammer and all. You need to know it. Okay, so you combine all of this together before you enter the market. And the fourth thing you need to add to it, the fourth thing is a confluence level. Okay, confluence level, a good level where there's confluence of support and resistance. Okay, so if you see something like that, then it's very good to enter the market. But all of these are still theories, right? So these four things I've given you guys: first, the crossover; second, the trend; third, the candlestick pattern; and fourth, the confluence level. Okay, so you can alternate this third for fourth. Okay, you get the confluence level, then the candlestick pattern. Now let's zoom into this market. Okay, let's zoom in and let's analyze this market for a trade so that you can understand what I'm trying to talk about. Let's be practical for a second. Let's be practical. Okay, so this is 1 hour time frame. But I told you guys earlier that you don't trade the crash on downtrend. It's not good for you. Okay, you only trade the uptrend of the crashes. Okay, so the market came to this level. Okay, it came to this level right here. I'm going to draw a line. The market came to this level right here, so you can see that this is a serious level right here. Okay, this is a support level. It is support level, not a resistance level. This is crash. So when the market is crashing, it's going against the trend of the normal market. Then it hits here, then it starts going up, then it came back and hit it again. The second touch started going up, it came back and hit it again. The third touch, then it went on a serious uptrend. Okay, on a serious uptrend. Then after which it reaches the top, touches an area right there, then it came down back. Okay, and retest this level again. Okay, went up a bit to this confluence level. Okay, this is a confluence level right here, so you can see this level right here. Okay, the confluence level. So the market came and touched the level, then it's consolidated for a while around here, consolidated, then the market start coming down. Okay, it started coming down. Now if this level right here, this support level, these are support levels right here, there is a thick layer of support level. Let me write a big S there. If that level is not able to reverse this market on uptrend, then we expect the market to come down to this support level here. Okay, this is another big support level right here. Okay, so hopefully the market this level might be able to bounce up this trade and you'll be able to enter it for a buy. Okay, but if it breaks it, then you'll be waiting for a retest. Okay, if it breaks down one, then probably there will be a retest, then a bigger downtrend. Okay, so that is how you check the levels. Okay, check the levels. So you must see the crossover too. So right here, the moving averages crosses over a bit, but it's not sure where it's going yet. But it's a crossover to the downward path, and we are not interested in that. We are only interested in the crossover to the upward side. There's something that happens here. Okay, so there's a small buy opportunity right here. Okay, that's why you need to check what level the market is. So a small buy opportunity right here, but it's at the confluence level, this confluence level right here, which can reverse the market. So it's a no trade. You're not going to enter it because that's the level that it is. So right now the market is still going down. Okay, going down. Probably these levels are going to reverse it. If not, then I'll be expecting the market to touch this last support level right here before we can get a reversal or a breakout. Okay, so that is how you form all these together. Okay, as per the candlestick for confirmation, I'm going to do that in my next video. So if you haven't subscribed to this video, try and do so. Thank you guys and bye for now.